No intro, no outro, straight fire. Que lo que lo que. All right, let's get into this video. So I know 2 weeks ago I said I was going to make a video on how I confirm a valid POC closure in my trading. So here is the video. So I'm pretty much going to break down one of the most important confirmation in my trading style. So what I consider a valid POC closure and how I use it to confirm that like I'm good with my directional bias. So you already know, if you've been following me, if you use volume profile, you already know that the POC is the price level where most volume is traded. So basically where the market agreed the most at. So when price accepts or rejects that level, for me, it matters. So for those new to my channel, the POC is this red line right here. POC stands for point of control, and again is where the majority of the volume is traded. I like to see rejections off of these levels before entering into my trades. This gives me like the thumbs up, like, all right, bet, like you are in the right direction. So for me, a valid POC closure is like very simple. Price must close above or below the POC in the direction of my intended bias. So if I'm looking for sells, I want the price to close below the POC. If I'm looking for buys, I want price to close above the POC. So as you can see, this is a POC closure below. This is a POC closure above. Um, this close pretty much tells me that the market is accepting value away from the point of control, not just wicking through it and not just testing it, which the market does a lot, but it's actually closing on the side that supports my directional bias. So remember, the point of control is like pretty much the market's fair price. So at that level is like where the highest traded volume is at. So when price closes away from it, it's a side, for me at least, of shifting value. That's just how I conceptualize it. So excuse me, the POC alone isn't enough for me. I have my confirmation. So pretty much I need context from the current session or day. And that's why I really only look at the charts once every trading day. So I will, or twice, I will, well, really once in the afternoon. I'll set my pending order, then I'll come back the next day and then look in the afternoon to see if my pending order's hit or not. So uh, if I'm looking for sales, price during that current session or day, which is the same session, I use session and day interchangeably, must be greater than the previous day high at some point. Why? Because I want to see liquidity taken above previous highs before I consider selling. So that tells me buyers have pretty much reached too far. They have reached their max, and now the market may be able to rotate. So what I mean by that is this is what a valid POC closure for me is for sales. So my directional bias is sells, right? Boom. Price closed below the POC. Boom. That's another check. So sells, price closed below the POC. Boom, that confirms my sell. In this session, where this volume is at, this session, as you can see, is higher than the previous session, the previous day. This annotates a boom liquidity grab. I have a liquidity grab followed by a closure below the POC. For me, this is golden because now I am ready to go. Set my pending order and then I bloom, hop into the trade, like hop into the trade, right? Um, Same thing, the opposite for buys, right? So uh let me find a buy example. All right, cool, boom, same opposite for buys. So if price during the session, right, is lower than the previous day session, which is right here, boom, price is lower, liquidity sweep, right? Boom. This is the price right here within this session. And guess what it did? It also closed above my POC. I know that my buys are valid and I'm ready. I'm pretty much ready to go, right? I'm ready to hop into this trade. And what does price do? Boom, taps me in, gets my little buy thing going on, and then it price heads to the upside. So pretty much to put it all together, right? Again, price must close on the correct side of the POC. So if it closes above, potential buys. If it closes below, potential sells. Again, it's in my directional bias, whatever I feel my directional bias is. I like to use weekly liquidity sweeps. You can use daily liquidity sweeps if you don't feel like waiting. You can use hourly liquidity. It's really up to you and what you think is good for your trading style. I am a swing trader. I don't day trade. I like to swing trade, right? So price must take out previous day's higher or low depending on the bias. So that is a liquidity sweep. Again, a liquidity sweep. Looking for sales, current day. The current day must trade above the previous high. So again, looking for sales, current day must trade above the previous high. Boom, liquidity sweep, right? Boom. Looking for buys, current day must trade below the previous low. Okay, cool. Boom. Price took out sales high liquidity, looking for buys, right? So when both conditions happen, or both conditions must happen for me within the same day or session. So when these two line up, I know that the market has grabbed liquidity, shown acceptance away from my POC, and has given me a clean directional read towards my directional bias. So that's when I start looking for entries. And you already know my entry model is the point of control. I like rejections. Boom. Price rejected it once, twice, thrice. All right, that's my goal in the zone. Get in on that sucker. So there's that. Now, what makes something a invalid POC? So an invalid POC for me, and I'm gonna tell you straight up, is very simple. All right, I know that I'm looking for sales. Price what closed below the POC. However, look what did not happen. Price for this day is less than price for this. There's no buy side liquidity sweep. This is not valid for me at all. I'm not even looking to get into this. Looking at for a buy scenario. And this is a really good buy scenario too. Like, okay, cool, boom. I'm looking for buys. Price closed above the POC. But look what price did not do within my session. Right? Price did not take out previous session's low. So for me, I'm not looking to get into this. And ironically, well, it's not ironic, it's just how things happen, right? If I would have entered in right here, set my stop loss at this low, I pretty much would have got stopped out, right? So that's why it's important to take nuggets and put it together to make see the whole conceptuality, if that makes sense. Real easy, real clean, real smooth. And that's kind of how I know if my POC is valid or if it's not valid. It's very simple. It's market structure. This is why I personally push market structure. You can't just hop into trading. You're gonna get clapped every single time. You need that market structure. So with that being said, no intro, no outro, straight fire. Peace.